Hi, everyone. This is Jason Briack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. We've had on Bill Murphy of GATA, the Gold Antitrust Action Committee, but we have not had on the other co-founder of GATA, Chris Powell, a newspaper editor in Connecticut. So thank you for joining us today, Chris Powell.
Oh, thanks for your interest, Jason.
Now, Chris, when you co-founded the Gold Antitrust Action Committee with Bill Murphy in 1998, you had a whole bunch of documentation to back up your claims. You're a professional journalist. You're not one of these mainstream media people that just reports whatever the Defense Department or Wall Street tells them to report. And in your opinion, is gold manipulation a conspiracy theory, or is it a historical fact based on documentation?
Oh, it certainly is a historical fact. Governments used to rig the gold price in the open. That's what the gold standard was. It was pegging the gold price to a certain amount of government currency. The London Gold Pool, which operated in the 1960s up to, I guess, March 1968, was a public scheme of gold price manipulation or control by the United States, the United Kingdom, and 6 or 7 other allied European governments, where they fixed the gold price at $35 an ounce. That was accomplished through a coordinated scheme of distorting the gold reserves of the countries participating in the gold pool. They all contributed a certain amount of gold to the gold pool and agreed to sell it as necessary through the London market, with the Bank of England functioning as their broker in order to hold the gold price at $35 an ounce. And that very public scheme of gold price control collapsed in March 1968 when the offtake through the gold pool just became too great and began exhausting the gold reserves of the member countries. There was open attempts not long after that by the International Monetary Fund and the U.S. Treasury Department to sell gold in order to knock the price down. Those were very public gold price control operations, and it is a historical fact. It used to be done in the open. Now it is done largely surreptitiously through not just gold sales by Western central banks, but also gold swaps and leases, which allow central banks to keep their fingerprints off interventions in the gold market. It's done through central bank sales of gold derivatives, gold options, gold futures. And these are all documented as well in certain places. If you know where to look, like the books of the International Monetary Fund, the books of the Bank for International Settlements, which is a primary gold broker for member central banks. So all these operations have been public to some extent, though in recent decades, central banks have undertaken to conceal their actions in the gold market much more than they used to.
Yeah, those are great points, Chris. And the London Gold Pool, that was overt. They weren't even trying to hide it, like you said. I believe at one point, I found this in my research, I saw newspaper ads. I think the London Gold Pool used to take out ads in the New York Times and in the London Times of saying that, it was unpatriotic to buy gold and hoard it. You were hurting the economy. You're an evil, greedy savior. The type of Keynesian nonsense that we hear now. They were saying that in public, but most of the people back then hadn't been brainwashed in Keynesian economics. They hadn't had decades of nonstop stuff, and they had grown up, during the 1910s or 20s. They were adults back then, and they had been taught, more free market and Austrian school economics and things like that before, the brainwashing started in the universities and stuff. But that's a great point you made, though, about the gold standard also being a way to manipulate the gold price lower, because that doesn't allow a free gold price, a free market price, but at least it prevents the politicians and the politicians and also the banks, fractional reserve banking, from, creating money out of thin air with loans and, bailing out their buddies and doing all these types of deals and taking a ridiculous amount of share of the profits of the real economy.
Yeah, well, governments will always hate gold, Jason, because it puts a restraint on them. It certainly puts an enormous, very frank restraint on them if that money is to be directly convertible to a fixed amount of gold. But even a free market gold price puts an enormous restraint on governments because it exposes the devaluation of their currencies, and preventing any recognition of this devaluation is a primary objective of central bank gold market manipulation these days.
Yeah, I mean the gold price, like even after World War I mean Churchill wrote about it that they set it too low, and that's because exactly like you said, the governments didn't want to raise the gold price too high, and then if they would have raised the gold price higher, it would have exposed the inflation, all the currency, and the bailouts and all the other things that were created during World War I, that the governments created all this extra money. So I mean, there's just been so much excess and mistakes that basically, you know, the one of the free market signals that shows there's two main free market signals that show that governments are having excess. You know, gold and silver prices going higher, interest rates going higher, currency values dropping. That would be the third, I guess. And we're trying to see governments hide at least two out of those three things right now.
Yeah, it's a matter of control. If people have access to an independent form of money, then governments lose control over people. This is really what the whole issue is about, whether there's going to be any kind of freedom in the world for people to avoid government currencies if they're going to be able to have some independence in their lives financially, or if governments are going to dictate to them all values for capital, labor, goods, and services in the world.
Now, Chris, when I try to explain some of these things and tell people about your website, or give regular mainstream financial people or Wall Street people, you know, regular hedge fund managers or people that went to an Ivy League school and they got an A in their Keynesian economics class, I try to send them articles from your website. They call me a nut, even though you have a better track record of pointing things out. They say, "Oh, look at the chart. The chart is saying that gold and silver, you know, are dropping and things like that, and this is a free market, and who cares?" What would you say to people like that? Are they brainwashed? Do they make too much money off the status quo?
Well, certainly, you know, the financial establishment isn't really terribly different from the government in the West in recent decades. Excuse me. Also, the financial establishment has, you know, pretty serious, really control of the press in the West. But all I can ask people to do is to look at the documentation that we've collected, some of which is historical, some of which is actually pretty contemporary, and to begin to understand what government is doing to preserve its monopoly control over money and its control over financial values. I don't have to resort to any particular financial economic philosophy or ideology. I can simply ask people, please, before you make up your mind about anything in the economy, try to find out exactly what is happening. Try to find out particularly what central banks are doing. Try to find out the full scope of central bank intervention in the economy. I don't think you can come up with any working ideology or philosophy as to what's best for the world unless you know what's happening. If you know unless you know what the powers in the world are doing, and that's why we compile and publish and clamor about the official records that we've collected. That's why we urge journalists to put some critical questions to central banks and treasury departments to find out exactly what they're doing in the economy to strip away the surreptitiousness. And unfortunately, it is very, very difficult to get any mainstream financial journalist to do any of this questioning, to do any of this research. I mean, it seems that, you know, they don't want to know what central banks are doing. I've really concluded that the first rule of mainstream financial journalism in the West is that central banks must never be questioned.
Yeah, and a lot of other government entities or large banks, especially if they're sponsors trying to sell mutual funds or bond funds or things like that, are not questioned either. You're not allowed to say anything bad about them on air. That was tying me to my next question. You already started talking about it. You're a professional journalist. You've been a professional journalist for a while. You do investigative journalism clearly with GATA. You've taken on people, powerful people. You've been a watchdog for the public here. You've pursued the truth. That used to be what journalism is about. Do you think the mainstream financial media, the mainstream media, they're not doing this because, they're worried about they're beholden to their sponsors, or they're worried about the government getting them fired or taking away their broadcasting license for a TV station or something like that?
Well, that may enter into it. I don't know what everybody's motives are. I can only, observe what they do. Excuse me again. I can only observe what they do, and they don't ask questions. They don't ask questions, even when the most incriminating documentation is dropped in their laps. I have to conclude from that these organizations are really part of the establishment. They are not going to make trouble for the government, and we have to go elsewhere to get our word out. We have to go to internet sites like yours, and really to alternative news organizations. And thank God for the internet, and thank God for the entrepreneurs who have set up these alternative news organizations, because we just wouldn't be getting anywhere without them, and the central banks would be confident of ruling the world without challenge for the next 1,000 years.
Yeah, I agree. There's definitely an information war. There's still a lot of Americans, unfortunately, Chris, who trust most of the mainstream financial media. Most of they trust the government statistics that the U.S. economy is still really improving and things like that. And it's just really sad, when you look at the real evidence, that you see that things are not improving. You just recently were down at the New Orleans Investment Conference down there, and they cover gold. They had Alan Greenspan as a guest speaker. What's your opinion of Greenspan these days? Do you think he's a sellout? Because he clearly admitted, I think, on the record, right? It was a congressional testimony when someone asked him about gold leasing and gold swaps. He was talking about it, and then he seems to have forgotten he said that.
Well, he did testify to Congress in July 1998 that the purpose of gold leasing by central banks was to control the gold price, to keep it down. In New Orleans, I was hoping that he would be asked some questions about that, and some questions about other central bank interventions in the gold market. Unfortunately, it just didn't happen. There was an accident. One question was botched, and then the other questions were not asked. So that opportunity was missed. But what is he trying to accomplish now? He's made a lot of gold-friendly comments in public forums in the last few weeks. He wrote an article in Foreign Affairs magazine. He's given a couple of interviews where he has argued that gold really is the ultimate money, the best money. What is he trying to accomplish? Some people think he's trying to clean up his legacy. Others think he's trying to make amends for his work at the Fed for all those years. Maybe he's trying to give the markets a hint that gold will have its day again. I don't really know. I'm not a gold standard person. Particularly, I don't care about gold particularly as a metal. It's just a piece of metal. What we're contending over here, is limited government, is liberty. It's accountable government. Really, the economic freedom for the planet, the exploitation of the developing world by the financial world. These are the issues that GATA is contending for. Gold is only the mechanism of this struggle. Gold is ideally the independent currency to which free people can resort when they're unhappy with government currencies. It's the independent currency that governments don't want people to have. It is the guarantor of free markets, not only in financial instruments, but really in all commodities and goods and services. I mean, that's really what we're fighting about here. I mean, gold seems so antique to most people, and indeed we are, many decades away from the era when gold was understood as money in a daily sense. I think we will return to a time when gold is recognized as the ultimate money, but people are not familiar with it anymore. At least not in the West. I think they're very familiar with it in India and Asia, but we are forgetting that history here, and I think we're going to have a very unpleasant lesson to learn, sometime in the near future.
Yeah, I think that history has been done intentional, where gold has been taken, out of the curriculum. That under the gold standard, when prices were stable, when people had more purchasing power gains, the U.S. economy flourished. There was a lot of goods and services created. The standard of living for the middle class increased. More people joined the middle class, et cetera, et cetera.
Well, gold had its successes, but again, we forget that there were booms and busts even in the gold standard era. I don't know what the perfect money is. I would argue that the best system we probably can hope for is a system where the monetary metals trade freely and are allowed to give free people signals as to what's really happening, so that people can resort to the monetary metals or to other indicators of value to other currencies when they're dissatisfied with government currencies. I think central banks realize that that's their great threat. They can't let people have any kind of independent measure of what's going on in the economy because it will constrain their power. I don't want a gold standard. I want the government out of the gold business entirely. I want gold traded freely and being the judge of all government currencies and financial instruments, and letting people have a choice. I think that will be as good as restoring a gold standard, because a free gold price will discipline governments just as effectively as a gold standard would have done.
Yeah, I agree. I'm in favor of competing currencies, and if you allow a gold standard, I mean, the government would get a monopoly on the gold again, and there are ways for them to cheat and get around that too, like the overstated gold reserves. I mean, the Romans clipped coins. There's so many. They could take out a good amount of portion of the gold and silver and put copper in. There's so many different ways for them to cheat.
Yeah, and they've already done that, because the central banks in the West are underwriting the whole fractional reserve gold banking system. There's, by some estimates, there's only 1 ounce of gold backing as many as 100 ounces of claims on the world's investment gold. And that's really why the gold price has not kept up with consumer price indexes in recent decades, is because governments have cheated. Even though gold is really not formally part of anybody's currencies anymore, governments have created the illusion of a much vaster gold supply than the world has. Governments have underwritten certificate gold. Governments have leased gold, given gold credits to investment banks, have sold options and futures to create the illusion of a much greater gold supply than the world has. The governments are already cheating with gold, even though we don't have any gold convertible currency anymore. That's just how big a threat a free gold price is to central bank power. That governments have to rig the gold market every day, have to sell gold, lease gold, swap gold, sell gold futures and options trade in the gold market really every day surreptitiously in order to control the price, because that's really just how powerful gold would be if it was allowed to trade freely.
Yeah, I agree, and I think the charts are painted for the gold and silver and the miners and things like that. That leads me into my next question here. You got some donations from some gold mining companies. That's one of the original funders of GATA when you guys got started. But why do you think more primary gold and silver miners don't publicly come out and speak out about the manipulation? I mean, maybe in private, like at a conference or something with a couple beers, off the record, some of these mining executives will admit, yeah, gold and silver mining price is manipulated, but they will not, talk about it in conference calls. They will not go on the record and talk about it. Are they scared of the banking executives? Are they scared because they owe debt to the bankers? Is that why you think the miners won't talk about it in public?
I think there's two reasons, Jason. The first is that the mining companies are immensely vulnerable to governments. Mining is probably the most politically vulnerable business in the world. Mining companies are at the mercy of governments for their mining patents and permits and their royalty agreements and the environmental regulation enforcement. Any government can shut down virtually any mine at any moment on any pretext. And in fairness to the governments, the metals in the ground are the property of the people of the sovereign country. They're only shared with the companies that would extract them. There are natural resources that are part of a nation's wealth. So governments have immense control over the mining business. And secondly, mining is probably the most capital-intensive business in the world. Starting up, even one ordinary mine from exploration to production can easily cost $1 billion, and that kind of money is typically available only from the biggest investment banks, and the biggest investment banks are very frankly, openly, officially agents of the central banks. In the United States, all the big investment banks are officially primary dealers in U.S. government securities. They are very often formally agents of the central banks and arranging bailouts in the economy when the United States government is trying to do some operation, a bailout, a rescue. Well, it always operates through J.P. Morgan Chase, which is essentially it's a branch of the Federal Reserve and the Treasury Department. Well, the mining industry is dependent for financing on these big investment banks, and these big investment banks are essentially just agencies of the central banks, which are always waging war against gold. So, mining companies can be, shut down at any moment by, their host government, and their credit and financing can be cut off at any moment by their, big investment banks. So I understand their cowardice. On the other hand, things are so bad in the mining industry now with the price of the monetary metals having been driven down below the cost of production. I would have to ask the mining company executives, do you want to die on your feet or do you want to die on your knees?
Yeah, that's a great point here. I'm waiting. We've seen Keith Neumeyer come out and start to speak about it, but I'm waiting for more of them to come out and start speaking about it. And that's a good point you made about debt. I mean, there's other ways to do financing besides debt. There's the royalty and streaming companies. Maybe if there was another 5 or 6 royalty and streaming companies like Silver Wheaton or Franco-Nevada, that would allow these gold and silver miners to actually build a mine without as much debt, so they wouldn't have to get the banks involved as much. Maybe that's a potential solution to that. But, I think more of them should, maybe not admit it in publicly, but start giving you guys more checks and then let you guys do the footwork behind the scenes, because you guys can have accomplished a lot since 1998.
Well, it's a nice thought. The mining companies are still going to be terrified of the governments, even if they escaped, having to be financed by the big investment banks. I'm not sure that the mining executives are just smart enough. Sometimes I think all they want to do is issue new shares and pay themselves, and the hell with their shareholders.
Well, maybe then in the future they'll listen, and maybe they'll start paying at one point dividends in gold or silver bullion or something like that. We'll see in the future. My final question for this interview, Chris, is what do you think is going to end the manipulation? Is there just going to be, there's not going to be any physical metal available? Are the mines going to shut down? Are you and my program, are we going to wake more people up? And people are going to say, wait a second, this is not right. My food bill, my gasoline bill, my utility bill, these things are going up like crazy, and the government says there's 1% inflation. This doesn't make any sense to me. This is all a lie. What types of factors do you see, like the gold manipulation ending and people waking up?
Well, maybe, there's a couple of options, I suppose, Jason. The London gold pool collapsed in March 1968 because the metal that was available for price control was diminishing so fast that the participating central banks decided that they had to close the pool down or they would lose the remainder of their gold reserves. Now, I don't know how much gold is available now to the central banks that are most active in controlling the price. I'm a bit surprised that they've lasted this long.
I'm very surprised
I thought they would have been exhausted by now. On the other hand, the economists Lee Quaintance and Paul Brodsky, who are also fund managers in New York, speculated in one of their reports a couple of years ago that the central banks throughout the world were very likely working together to reallocate the world gold supply more in the direction of the big dollar foreign exchange surplus holders like China and other Asian countries. And that, the logic of that is that China is very supportive of gold price suppression to a certain extent because it wants to obtain gold cheaply and doesn't want to run the price up before it has fully hedged its U.S. dollar surplus and its foreign exchange reserves. So, it's possible that simply an exhaustion of metal from the vaults of the manipulating central banks will close the pool down. I think it's more likely that a central bank will pull the plug on the scheme either as an act of opportunism or as an act of an economic war. Even a country as small as South Korea has a fairly substantial dollar foreign exchange surplus. The conversion of its U.S. Treasury supplies into gold would explode the gold price. Any country with a reasonable foreign exchange surplus could do it. I think right now China is probably cooperating with the West to try to hold the gold price down long enough that ordinary retail investors and funds puke up their gold, so that the main gold ETF GLD is largely liquidated. That gold investors, at least in the West, are demoralized enough to give up their metal and let it be melted and re-refined in Switzerland and sent over to China. When China decides that it's adequately hedged, it will get together with the other central banks and they will announce on a Sunday night some big worldwide currency revaluation that likely will include a substantial increase in the gold price, and we will start another 50 years of gold price control just at a higher level. I think that really is the pattern of history. I think retail investors, ordinary people like you and me and people who listen to your program certainly can hasten this a little through their own metal purchases. I think this issue is almost certainly going to be decided in Asia, partly by ordinary Asians recognizing gold as money and continuing to buy it, and particularly by Asian central banks that obtain gold surreptitiously to hedge their dollar exposure. And everybody thinks the Chinese are so smart. I think the Chinese were incredibly stupid here. Why they let their foreign exchange surplus get built up such amazing amounts of dollars is beyond me. I'm sure in Chinese there's the equivalent of the saying that when you owe the bank $1,000, you got a problem, and when you owe the bank $1 trillion, they've got a problem. Well, it's China's the one that's the problem when it's got $3 or $4 trillion in U.S. dollar foreign exchange reserves, because there's really no very good way to hedge that, and the U.S. government can devalue those reserves anytime it wants.
That's a good point. China's also been running a dollar peg too. So even though they have those foreign exchange reserves, when they are accumulating more dollars, they have to print more RMB. So they've been doing that to keep their currency for fixed exchange rates. But I mean, almost all governments that trade with the U.S., all developing countries, have been running, either fixed exchange rates or dollar pegs or things like that, manipulating in the currency markets.
Yeah, I think they realize that, as Jim Rickard says, the Chinese know that the U.S. dollar is going to have to be devalued at some point. The world just can't keep absorbing infinite amounts of U.S. dollars. It's really imperial exploitation to do that. It's not in the interest of the rest of the world. And I think, as Rickard says, China knows that the dollar is going to have to be devalued someday, and it wants to hedge itself. But when will China and the other countries decide that they've had enough and that they're fully hedged? They haven't called me yet to tell me.
Yeah, I agree. The current system, the monetary status quo, the world economy, the way it's designed, I don't think it can continue for that much longer. I think we're in like a zombie state, an end game, where maybe another year or two, at most maybe 5 years, if that, before the next system has to be put in place. And we're starting to hear the IMF come out and say things like this, and some occasionally other central bankers come out and say things like this, that they realize it's not sustainable. But I think all the different powers are fighting over what the next system is going to be.
Yeah, one of the most interesting documents that we've uncovered was the November 1943 edition of the U.S. War Department's intelligence letter during World War II, Tactical and Technical Trends. It was a study of the currency policies that Nazi Germany was running in occupied Europe, and it showed that really the most effective mechanism of imperialism is not military occupation so much, but control of the currency markets. We have this image of the Nazi looting of occupied Europe in World War II as having been largely a matter of the SS going into the Louvre with, bayonets on the rifles and
gold or jewelry.
Yeah, just taking the paintings off the wall or the gold reserves out of the bank and running it back to Germany. And certainly a certain amount of that happened. But as the U.S. War Department's intelligence letter and as historians like Gozzelli, who wrote the 2006 history, Hitler's beneficiaries, have noted, the primary mechanism of Nazi German imperialism in World War II was control of the currency markets. The Nazis would rig the exchange rates between the Reichsmark and the local currency. And this turned every citizen of an occupied country into an agent of the occupation. And it created a one-way flow of production, so that all production in occupied Europe flowed into Germany, and nothing flowed back. And for 4 or 5 years, Nazi Germany ran one hell of a trade deficit with the rest of Europe. But since Nazi Germany was controlling the currency markets, they didn't care. Well, this is pretty close to what the United States is doing in the world now. If we control the currency markets, if we rig the currency markets, if we can determine that our currency is worth more than everybody else's currency, we can exploit the other countries, and we can suck up all their production, and we don't have to send them anything back. They send us refrigerators and oil and electronic goods and cars, and we send them colored pieces of paper and electrons. And that is as much an imperial exploitation as anything the Nazi occupation did in Europe in World War II.
Great point, Chris. We're definitely on a dollar standard now. That's what the world is. Once Bretton Woods ended, we switched to a fiat dollar standard. And there's just artificial demand for dollars. There's because of the world reserve currency, the dollar being the world reserve currency, the dollar being the petrodollar. And these central banks, these global central banks, have been forced basically to stack, many trillions, over 9 trillion. I've read other places. I think John Williams says it's over 15 trillion now dollars outside the United States in reserves for all these different countries combined, sitting in warehouse. That's an enormous amount of dollars.
That's an enormous tax on the world. That's the tribute that the world, including the developing world, has paid to the United States. This is a terrible exploitation of the world. This is the poor developing countries that have been forced to pay this tax to the rich country on the block, and it's really a shameful thing.
Yeah, exactly. And then, the metals price suppression, the gold, silver, now the oil price gets knocked down, and then, the mines shut down, and these miners they can't feed themselves and their families and things like that. So, there's real world ramifications to these paper metal price suppression. Wall Street and hedge funds and the bullion banks make tens of millions, if not billions of dollars manipulating these prices lower. By the way, Chris, they're buying with their shorting profits on the paper market, they're buying metal, a lot of them, with their profits. From what my sources say, they know the manipulation's going down, and they're shorting the paper market and buying metal as an arbitrage.
Well, I hope it's going down, and I hope we don't have to do this too much longer. But I make no predictions. I don't know when this is going to end. All we can do is collect the documentation and urge people to ask critical questions, and the world is going to have to take some responsibility for itself. We're just, one little organization.
Yeah, I agree. It's really sad, though, what's happening to the miners, how the miners are getting affected by the paper's metal price, because there's just so many jobs in the developing world that are built around mining and farming and oil and things like that. Well, Chris, I want to thank you again for your time here. Our listeners should really enjoy the insights you provided, and GATA has a lot of great news stories on there. I'm on there almost every day looking for interesting news stories. Please tell our listeners more about your website and how they can donate to GATA.
Oh, sure. Our internet site is GATA for Gold Antitrust Action, GATA.org. We send out a bunch of dispatches every day, news stories and sometimes research pieces of interest, I hope, to monetary metals investors. People can get on our mailing list without any charge. There's a mechanism for signing up for our dispatches in the right column at GATA.org. You can sign up for individual dispatches. Excuse me again. You can sign up for individual dispatches, or you can sign up for the daily summary dispatch so you don't get too much email. If you go to GATA.org and you want to help us out financially, we certainly could use it since the mining industry has agreed to die quietly. We're not really getting much help there, but there's a little legend over on the left side of our internet site that says how to help, and we're equipped to take donations by credit card over the internet, and I guess by Bitcoin as well. Or people can send us ordinary checks at the address in the How to Help section, and we are recognized by the U.S. Internal Revenue Service as a tax-exempt 501c3 nonprofit civil rights and educational organization. So contributions to us in the United States are federally tax deductible.
Very good. I want to thank you again for your time, Chris. I enjoyed the discussion. And, when we have more events coming out, news stories about the gold market, we've already seen, these fines from Barclays, and there was another fine, I guess, from UBS this week. We'll have you on again to talk about that.
Very good, Jason. Thanks for your interest.